Okay. Right. So I'm actually recording this, and it should be available to all afterwards. So right, welcome. I'll look into the camera. My name is Ross Burland. I've been with FX Street for many years. It was my 10-year anniversary March this year, and I've progressed over the years from working on the strictly on the news section, um, with updating the website with economic and political events. And over the course of time, I've been delving into the realm of actually trading Forex commodities and indices. Don't ask me anything about crypto because I'm really not. Um, I haven't been immersed in that scene. I mean, I've done dibbled and dabbled, but there's just so much opportunity elsewhere that I don't need to brain fog myself with anything new just as yet. So Forex specifically, I started in 2020-ish as a junior on a market making desk in the city of London, where we had none of this fancy technology. It was done on a Reuters terminal and basically quoting to banks, making prices to the banks and monitoring order flow. And it's something that we're going to touch on today, order flow. Um, and over the course of the years, I've worked in various facets of the market, but predominantly in the banks before I retired from London, went traveling, and fell in love with Central America. So here I am, um, and working with you guys here from Central America and working predominantly the US session. And for me, that's ideal because, as we'll get to, it gives us a full day of activity to analyze and make our trading decisions from. So we've got Asia and London potentially setting us up if the moves haven't already happened for what we're expecting from having analyzed the week Monday, Tuesday, Wednesday, Thursday. Today's Thursday, Friday. So taking Friday for an example, and we're going to go into this, we would have had a full week of information of order flow for us to make our trading decision for that day and hunt out our best trading setups. So, as I've asked for, if any of you guys could raise a hand, if you're not already a member in the premium service, let me know because I just want to give a quick presentation of what we're all about. So, I'll just give you a few seconds. Um, so, you're not able to say hello or just something in the chat? Just a Y for yes or a no for you're not a member. Or if you are a member, if you're using our Discord service. The topic for today is going to be preparing for day 3 of the day count. And many of you who have followed me in particular, out of a number of analysts that we are, that run the service, I in particular, okay, well, welcome, Martin. I in particular will use the days of the week or the weeks of the month or the months of the year to formalize to formalize my thesis rather for the day ahead. And I specifically trade the US session. This does not mean that this cannot be applied to trading Asia or London, but for me, well, being based in Central America, or no matter where you are in the world, for me, the US session is where I feel that you're going to have a lot of information that's going to help you make the optimal trading decision on the day. Um, so, what we're looking at today will be how the market moves in cycles of order flow. so that we can prepare for a directional bias. Now, that does not mean that we only trade with our directional bias or our thesis on the day. It's a bonus if it turns up. If it doesn't turn up and we see a setup going the other way, contrary to what we believed was going to be the direction of the market, you surely can trade. You can trade against the direction, against your thesis, but there are specific times and ways in which to do that correctly. But essentially, what we're looking for is if this happens, then we expect that to happen, and we want to be part of that happens and come out profitably, managing our risk and sticking to our trading plan, our rules in a mechanical trading fashion. We're not here to gamble and put our finger in the air and, oh, it looks like it might be coming down. No, we need to formulate a plan and a strategic approach to trading. Now, this specific strategy can be used um, for swing trading, but we're not going to go through that. We're gonna stick to day trading. So you need to decide for yourself whether you are better placed setting and forgetting and getting on with the rest of your day and leaving a trade open that can run overnight and it can run for a number of days, aka swing trading, which means you may need to get up in the middle of the night and manage that trade accordingly, depending on how you conduct the trade, micromanage it throughout the duration that it's open. Or are you the sort of person that can, yes, dedicate a few hours a day of your morning, whether it be the London session, the Asian session, or US session? So you need to pick and choose which one is going to suit you. Or you might want to totally indulge in the markets and trade both ways swing trading, position trading, which is essentially longer term swing trading, or day trading. I personally, I've done a bit of both, but I stick with day trading. Um, Now, in particular, we are trading the US Open. So between 7 a.m., which I generally ignore somewhat, and between 7 and 8, the market is setting up for me. And then between 8, 9, 10, 11, maybe 12, or if there's something really juicy after 12, but predominantly we're sticking to the window of between 8 8 and 10, 8 and 11, something like that. But before we get cracking, this is all about our service, the premium service, and we have a promotion. So I just want to run through this slide that we have here. So this is the Black Friday promotion, and we will give those a discount who want to sign up and give it a whirl. And I'll give you the link at some point when I can come across it. But essentially, um, we are your trading partner. So there is a team of us that work around the clock throughout the various sessions, not so much Asia, but London and the US session. And we're giving you exclusive, reliable analysis. It's actually a very personalized service in that you can ask me directly and call me by Ross. Ross, how you doing today? What do you think about the euro? I'll go away, take out time of my day at that moment, and try to give you a timely, informative piece. I personally like to use video. I sometimes jump onto a voice message if I just don't have time to type it out. I can just quickly burn you a voice message that gets sent into the group. And we keep it all into one area called Ask Our Analysts. Um, so within there, you'll be able to speak to a number of us that are on duty. I specifically am working within the US hours, so 7 a.m. New York, I'm here. I'm generally pretty tied up in the mornings, but you can feel free to hit me a message. But what my approach is to scan through the markets, the instruments, and look for those that are setting up in accordance to what we're going to talk about, the day count, the flow of money in the market, order flow, okay, and whether or not there's going to be a setup for that particular instrument for the day that we're trading, the New York session. So you're going to be able to tap into actionable analysis and signals. So from time to time, I will put a signal. My particular strategy at the moment, I need to tweak it so that it can be serviced through our signal service. But at the moment, it's very in the moment. I communicate way ahead, so I give you my pairs, my watch list in a video that you can go through over and over again if you want to follow me in the way that I trade, and you can take the very same trades that I do or pick and choose which ones suit you best. So that's the way I work. And then the other guys are working. They'll give you detailed, comprehensive insights into whatever instrument that you are asking. So you can say, Ross or Ian or whoever it might be, give me your opinion on this. Where do you see support and resistance? Why is this doing that? What do you expect from the news and all sorts? So you get instant expert access, and that's the beauty of this. And we get very, very good ratings on Trustpilot. So go ahead and look up Trustpilot. I mean, I might just pop that into the chat for you. There's Zeb saying that we've helped you immensely. Great. So if I just Google, bear with me, Trustpilot, we're near enough. What are we on now? 4.6 stars. Would you look at that? And going up, up and up. So I'm just going to pop that in there. So if anyone wants to have a gander, um, there's all the reviews in there. FX Street is the best site I've come across at doing what they do. When they have their live sessions, it reminds me of how the internet was 20 years ago. Is that not easy to pull off? Yeah. So another part of the service then, when we have live sessions, the important market moving events, we have a team of analysts that will jump over to our live coverage, and there you can ask us direct questions. But essentially, we're giving you spinning off as it happens in live time. So, for instance, let's say it's the Federal Reserve interest rate meeting. We're giving you live commentary about every single important word that's dropped, that's either dovish or hawkish, that can help you um, make your trading decisions there and then. Whether it be for a day trade, a session trade, a swing trade, a position trade, if you just want to stay in touch with what is going on. Okay. Now, not everyone here that's part of the membership are expert traders. Many, I'm sure, are dipping their toe in the water and they're demo trading. And I would suggest if you're not a professional, by all means, trade with real money, but keep it small and keep it to an amount that you're prepared to lose. Because in this market, and like with anything in life, you've got to fall off your bike a few times before you can really learn to stay upright. And that's what trading is. As in all things in life, it takes time to learn, a lot of dedication, hard work. Cut off your social networks for a while, say no to that beer that you've been invited to go out to, or that football game that everyone wants to come around your house and watch. You've got to put a lot of time and energy into this. But we as a team will help you get there a lot faster. All right. So, when you're going off course and you're not on the right track, we can pull you back in and keep you going in the right direction. So that's essentially what we're here for. Um, and as I said, it's very personalized, and it's well worth the money. It's not cheap because we're not good. It's cheap because we generally are very enthusiastic about what we do. We love what we do, and we were where you were once, and I think it's like with anyone. Anyone that's an expert at something, they love teaching and they love getting people up to their level. So that's what we're all about here. So these are the features that I've outlined. I mean, you can take a screenshot of that, but you get the news, you get an economic calendar, all, like I said, the events are covered live webinars, such as what we're giving you now. And you'll have access to various other experts that will give you webinars on specific topics. You know, you can pick and choose which suits you. We give you signals for which you can trade from. We give you trade plans, which you can pick up and run with or decide it's not for you. Um, you get Ed Ponzi's live stream, so he might be doing a live stream on a particular day over an event or whatever it might be, of which you can follow him trade. Um, and I am currently putting together a smart money concepts course. It's going to be a comprehensive, extensive course. We've already got a fair few of the videos, introductory level videos out for you, and there'll be many more to come. I'll be drip feeding it through on a weekly basis until we get you up and running, where you can essentially pick up on the trades that I personally will take on a swing trading basis. And we can also incorporate this into our day trading strategies as well, because there's quite a bit of crossover. You get the traders room where you can all collaborate and talk to each other and spin off each other and get a helping hand from those that might be a little bit more advanced from you. It's a very friendly atmosphere. And let's face it, trading by yourself can be a lonely game. So it's really good to get that interaction with fellow traders. Um, Now, the longer that you stay with us, you're going to get more access to better things, essentially. So you're going to get perks for long-time users. So, for instance, the Smart Money Trading course, you'll get your introductory as a welcome. And then if you stay with us over time, you're going to get access to really juicy, invaluable information and strategies as we go. So give us a whirl, give us a try. And then if you like it, stick with it and grow with us over time. You'll get 24/7 access to these types of videos and my market watch list that I do every day, and so forth. And you'll get trade alerts that even turn up on your mobile app, and perhaps even your email at some point. That's I get them from email as well. Now it's you get unlimited without any ads. Uh, you get limited and read only and limited. This is the free version, and then you sign up. I mean, so unlimited news. You get the economic calendar that's covered in ads. You get event live coverages that are limited and read only, and the live webinars will be limited. But with the premium, you get all of that plus everything here that is ticked. All right, so there's invaluable stuff there for the premium at a very, very low price. And look at that, on Black Friday, grab the opportunity. You're getting up to a 75% discount to something that's relatively cheap anyway. All right, so go ahead and grab that. I think Yohei, if you could give me the link for people to take that opportunity, that would be wonderful. If you could pop it into the chat or into my Slack, and we'll get that. Right. So without further ado, that's the presentation. Let's get into what I wanted to present to you, which is going to be one of a how many series? This was one, two, three, four, five. So this is the first of a five-part series about trading day three setups. Now, you might ask yourself, what on earth is day three? Okay, well, there are variations of day three. But to give you a quick insight, the market flows. And if you look at charts, you see it going up and down, left, right, all over the place. And you can't make sense of it. But if you start to take a step back and look at it through a wider lens, you'll notice that the market is moving in flows. There are ebbs and flow, and over time, you'll start to pick up on the patterns that they tend to repeat themselves. Not identically, but once you get into the rhythm of the market and you can refine it right down from months to weeks to days to hours to sessions to hours, I should say. So the market is flowing and you get the day count within that flow. And within that day count, on a day three in particular, I'm looking for parabolic reversals. So a reversal of a move up. I'm looking for the reversal. Move up, reversal. And I want that reversal to be parabolic, right? I'm in and I'm out as quick as I can, and I can get on with the rest of my day or jump to another instrument and look for the same pattern and the same setup and the same outcome. Okay, so they can be reversals or they can be continuations of the cycle of the order flow, right? So you might have day one, day two, day three, sorry, day three reversing, or it could be day one, day two, day three continuing. Okay, so you get day one, day two, day three. Now, day one, there are a number of day counts, and I don't want to confuse you all with the various different day counts, but it is very, very simple. You'll have uh, day counts that start on a Monday, and guess what? That is called day one. Tuesday, guess what it's called? Day two. And Wednesday, guess what it's called? Day three. Monday, Tuesday, Wednesday. Day one, day two, day three. Day one, day two, day three. So on day one, day two, the market is moving. It's moving. And on day three, it's moved to an extent whereby you can look back at day one and two and go, oh, great. It's now day three, and the market has been moving up. So Monday, Tuesday, and now we're on day three. What do we think is going to happen? Well, it's either going to continue day three or it's going to come back and take out day one, day two. Okay, so does everyone follow me so far? I hope so. Right, just let me know if you can or you don't, or you want me to go all good. Yeah. Right, the idea of this is knowing who is in the market. We want to know who's in the market. So that I can identify the best trade setup for that particular environment. All right, over a 3-day setup. It could be a 3-session setup. It might be Asia that started off and it's come up, and London has dug a little bit into those longs in Asia, but it's proceeded to come up. So you've got Asia, London. Now we're in New York and it's going sideways and coiling. Well, it's either going to do one of three things. It's either going to go ping and go up, or it's going to come back, or it's going to continue coiling, and maybe you'll get a trade on day four. So if it's Monday, Tuesday, Wednesday, and on Wednesday you've got a scenario where you've got Asia, London, the US sitting up high, well, the more probable outcome would be where you've got Monday that's moved up, Tuesday that's moved up. Now you're on day three, Wednesday, and it's still moving up, but it's starting to decelerate. Well, my best bet, what I'm thinking here, my bias is that this market's going to sell off. And I want to be I want to be in that sell-off. I want it to be a parabolic move where I'm in and I'm out. I take 50 pips and I run. And I'm not interested in what the market does from there on. I'm not here to, right now I'm going to try and buy the dip, or I'm going to sell the rally when it. Just look for your setup on day 3, close your screen when you've done it. Okay. Now these have a high probability hit rate. Day 3s especially. Day 2s can be quite choppy. Can be quite choppy and hard to navigate. Today is a Thursday, and we can just scroll down and I'll show you what we had on Thursday in the NASDAQ. And what I'll do is I'll go to my 3-day template for this. And for members in our Discord, you'll have access to my template of indicators. But for those that want to take a snapshot, feel free. But you'll have to become a member to understand the logic behind the madness of all of this. I know some people's like their screens to be completely clear, and that's fine. But for me, I want to have a glance at the screen and know exactly where I am. All right. So this particular template gives me the day of the week. So today's Thursday. So guess what day it is in the 3-day cycle? The 3-day cycle repeats itself. You get Monday, Tuesday, Wednesday. Wednesday turns back to day 1. So Wednesday, day 1, Tuesday, day 2, and we're setting up for day 3, Friday. So Thursday for me is, I can trade on a Thursday just like it did. Did very well out of that move by being patient, letting it set up. We got 3 sessions of rise. 1, 2, 3, consolidated. There's my death candle, wiping out all of that. And I was looking for an entry around the closing price, of which I picked off pretty nicely. Now, I didn't get the full whack out of the move. That was a 5R move. But in preparation for this meeting, I just wanted to get out and not have anything running and just leave it. I could have left a runner. But so be it. I was very happy with the result and job done. You see, trading is not about picking bottoms or tops, but finding optimal entry and exit points. And that's what we got here. So I was pretty happy with that outcome. Very quick trade, 5, 10, 50, half an hour, and you can't complain about 3 to 1. Anyhow, so I digress a little bit. We're talking about the day count. So let's go out to a 1-hour chart to make this simplistic. And we'll include 2 weeks worth of information. Right. So we have a number of day counts. We've got day 1, Monday, day 2, Tuesday, day 3, Wednesday. Wednesday resets to day 1. Day 1, day 2, and Friday, day 3. What happens on a Monday? Count with me. Day 1, day 2, day 3. Wednesday resets, day 1. We're now on day 2. So when we come into Friday, where are we? We are day 3. Now let's have a look back at the week that's been. Who is in the market? Are bulls in control? Let's go back 2 weeks. Are bulls in control here? Looks like it. A simple way to do it is to draw a trend line. Love them or hate them. Some people argue there's no such thing as a trend line and la 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 and all rubbish. They're for real tail traders. But look, if it helps you in your trading, use them. So there's my trend line. Now, just by looking at that, and let's just go back to a really plain old chart. By looking at that, is that price away from the medium of where that was starting off? What's the likelihood of that coming back into line? Pretty high. And we've already seen that, right? We've seen that start to happen. Okay? So what I'm looking for on a day 3 is either a continuation or I'm looking for a reversal of the trend. Right? So we've had a displacement away from all of this volume. So we're trapping traders, breakout traders that are trying to go long. Bang! You've been chopped up. Now we might come up, and for those that are holding on to their long, guess what? They are going to be desperate to get out of their trade at the best possible price. They might have even moved their stops lower, and the market's going to move up and stop them out. And once it's stopped them out, it may even continue going in that direction, or it's going to put pressure on all of these that are going long and come back into line with the broader trend. Okay. Everyone follow me? Now, these 3-day setups for me are best when they are at the high or low of the week. Now, when we look at this week, Monday, Tuesday, Wednesday, Thursday. Let's get my template up. We can do this properly, and I'll try and bring it down to the bare minimum of indicators. Right, bear with me. Okay, that'll do us for now. Yeah, no problem, Zeb. See you later. So as you can see, not only are we at the high of the week, so we started out on Monday. It was Friday. So that was the opening range from Monday. We popped higher on Tuesday and we formed a high of the week. And then we made a new high on the week on Wednesday. And we've made an even higher high on the week on Thursday. Yeah? And we've sold off. And guess what day of the week it was when we sold off and where we were? We were at the high of the week. We were on day 3. This was a parabolic sell-off, right? Which I was able to trade, knowing that we're on day 3, that we were 3 sessions of rise, 1, 2, 3. All right, so I'm looking for the sell-off, and that's what we got. So that is the power of day 3s. Who's in the money? What types of traders are coming in? So all of these types of traders, you see, they're breakout traders. They've got their stops below Tuesday and Wednesday. Those that bought on Tuesday, right, they're in the money. Oh, they see it coming down, or I better bring my stop up to break even, right? And where am I going to put it? Well, I'm going to put it, and it comes Wednesday. Well, I'm going to put it under Wednesday's low, right? And there I think I'm safe. If it comes down here, well, that's it. The market's probably reversing. They might be right, and they'll be grateful that that the market came down, stopped them out, so they didn't lose too much money, and it kept going. Right, but that's it in a nutshell. We're looking to put the long squeeze on a day three. Yeah. So we've got day three longs reversal. That was a day three long reversal live. Right. So that is the power of a day three. Now that's Monday, Tuesday, Wednesday. Another variation of a day three is the 3-day cycle. And that's got absolutely nothing to do with whether it's Monday, Friday, Wednesday, Tuesday, whatever. It is simply a continuingly uh, day counting cycle. All right. So I'm just going to go to some random place on the chart. And then we're going to go all the way back to here. I've done no preparation on this chart whatsoever. And we'll start on a. Now, these 3-day cycles start day one is when we've had a break of the current week's high or low that's failed, come back inside and closed within the range of that day, or the following day um, continues in the direction of the failure. So to give you an example, let's start all the way back here. Now we need to find a high, right? So this high here, which was Thursday, the 12th of October, this high here, right, broke Wednesday's high, didn't it? So the high of the week at the time was Wednesday's high. Um, right. So that was Wednesday's high. And I'll mark it red. And we'll just pull it across. So on this trading week, Monday, Tuesday, Wednesday. Wednesday made a high. Thursday broke the high of that week. And it failed. It failed massively. It failed and it closed all the way down, made a fresh low, even closed below. Sorry, it broke Wednesday's low as well. But that's not important. The important thing is that it came up and failed, right? And that starts the day count, day one. And it's day one shorts are in the market. Sellers, bears, whatever you want to call it. I call it shorts. So we've got day one shorts in the market. Day one shorts. Okay. Day two shorts came in the market. Now you might have new money coming in, but you've certainly got everyone here that was profitable in that move are staying in. They might be moving their stop losses. They might put their stop loss above Wednesday's high. Who knows? And then on day two shorts, we've got day two shorts, right? Everyone follow me? Even though, I mean, it happens to be day two Thursday as well, but just forget that for now. So this is day two of the 3-day cycle. Day two, 3-day cycle. Not talking about the day of the week, I'm talking about the cycle. So day one, day one shorts. Now we've got day two shorts of the 3-day cycle, day one of the 3 day two of the 3-day cycle. And now, guess what happens on day three? Lo and behold, we get a parabolic correction on day three of the 3-day cycle. So when you know that you're coming in from the high of the week, you've got day two continuing, when you're coming into whatever session it is, maybe it's Asia, maybe it's London. Obviously, you're not just going, oh, it's day three, so I'm going to buy it. No, you gotta have confirmation, and the confirmation here was that London sold off. They failed to break a low, right? They failed to break a new low. They stayed inside, right? So maybe this here was an inducement to think, oh, well, this is going lower in line with day one, day two. Maybe it's going to be a day three continuation, which it could have been, but it wasn't, was it? So you're looking at price behavior. So we pulled up back inside of the range on the day, right? We broke the high of the day, Asia and London, both of those sessions highs. All right. And that might have been your trigger to go, well, you know what? I think this is going to be a day one, day two, short squeeze. And remember, we're not trying to swing for the fences. We just want to take a bit out of the market. So at this point, on a day three, right, you're coming into London. You're coming into the New York session. And I'm on an hourly chart here. So I'm just going to go down to a chart that I might be monitoring this from, which would be, say, a 15-minute chart. What I'm looking for is this market to confirm to me. I've got a sort of a trend going on here. I mean, that's not really a trend, is it? So more like this. Or you could bring it right in and say, well, look, I think the trend is here. Right. So I'm looking for the market to get on the other side of this bearish trend. I mean, you could even draw that probably all the way up to there, however you want to do it. But you want to be, this is the front side of that bearish trend. As I said, who knows? This could have easily, done this, pulled back, and this could have continued in line with being front side of the trend. And you'll have a day three runner. That's fine. But I'm looking specifically here because of the price action. We stayed above the closing price, right? That's key. We broke it, came up, but we failed to continue below that closing price, which tells me, you know what? I think it's going to be a day three reversal. So you start positioning yourself. You start looking at your market structure. Right. I regard all of this and that closing price to be support. So long as we don't get back below that support, I'm going to be looking for buying this market. And what am I going to target? Who's in the market? Who is in the market? Shorts, right? Where are their stops going to be? Well, probably where the last rally or sell-off took place. So you might have stops. Basically, where people think if the market breaks this, then I'm wrong. So there's an area to target, because if it breaks that area there, that's breaking structures, and that's where a breakout took place. So if it breaks that, then people that are short are probably going to have their break-even stops. So that's probably where the market's going to target. Or you might say, right, I'm going to target on a second target, might be up there, all right, above Friday's highs. But my ultimate target is going to be up here, right? It's not to say it's all going to happen in one day, but nice to be optimistic and just have your levels out. Your first target might be, just even if you get above the day's high so far, okay, or you might want to see that break and come back in and then take it. But let's see how this plays out. So it's 15-minute chart. Remember, right? We're now monitoring in the US session. What is this price doing? Where's the low of the day so far? And I'm talking about the US session low. Right, well, it's down here. So I'm going to say my support is there. Okay, so long as the market stays above my support, I'm looking for buys. All right, and I'm just going to monitor this price action in this hour. Right, now we're moving into our trading hour, and look at that. Now, is this bearish? Does any of this look bearish to you? Probably not. Right, we are on a day three. It's either going to go continue with the trend or it's going to reverse. And to me, this has broken that trend line. It's broken the structure. It's showing real intent. So for me, I'm going to buy this. Right, rightly or wrongly, I might get in a bit too soon, but you've got to have your own strategy for what you're going to do in this circumstance, where you're going to target. You want asymmetrical risk to reward. Okay, so you might want to take a minimum of a 3. Right, that means you can lose 7 times in a row and still come up 2% profitable if you're risking 1%. Yeah. So no idea how this is going to play out. I kind of do because we had an idea, didn't we? But there you go, straight to target. Right. Maybe it will carry on going up, maybe it won't. But I don't care what it does after here. Not interested. I've made my money on the day. I am done. And that is on a day 3. That's an example of a day 3 reversal trade. Okay, do you move your stops to break even? If so, at what point? Right. Well, as traders, we're always working in line with how the market is behaving. On a day 3, you'd expect that this market not to come back. If it was a day 2, you might expect a bit more choppiness. Okay, not saying that your trade can't go in the direction that you're positioned for, but you might be a bit more cautious, and you might want to have your targets. I mean, in an uptrend, a little lower. You might just want to take a 20 pip scalp instead of holding out for a 50 pip or a 100 pip that you might get on these parabolic all-in day 3 days. Right? That's just addressing one aspect of your question. In terms of how would you manage your stop? Just trying to get rid of something here. 1 minute. Right. Just want to make sure I haven't missed out anything before we move on. No, pretty much covered. Good. Right. So in terms of your stop, I mean, in this instance, well, look left. Okay. What I saw here is this huge gap, this big displacement. There's nothing in there telling me that this market is going to come up and come down. So I'm not gonna go to break even. I'm just gonna let this ride. I'm not even gonna take any money off. What I do like to do sometimes, especially if, like at this point here, let's say, you see that low over here on the left. What I might have done is taken some money off. So if I've gone in, say, with I like to risk 1% on a trade, but not all at once. I might put a little starter in. I might have put a little starter in. You know where? I might have done it on that candle right there, or even on this little doji candle. Yeah, I might have gone say 0.25%, and then I might have added. Let's do another 0.25%, and let's do another 0.25%. This is confirming. So now I'm almost full risk on 75, 0.7% risk on, keeping my stop all the time here. Now, when I get a bit more in profit at a point where the market might come back on me, which is this structural point here on the left, the prior day's US session low, I might say to myself, do you know what? I'm just going to. So I was in here, right? I was in down. Where was I in? I was in down here, right? When I stopped there. So I'm already a good third of the way into that trade. Yeah? So I'm already making some good dough here, right? So I've made a good third on my trade, and I'm coming up into, say, almost halfway up. I'm just going to take some money off. That's number one. It's going to give me peace of mind that I've made some money on the day for my analysis, and it's going to cover my commissions, right? And left me with some profit on the table. So even if it does come back and bite me, then at least I've been paid on the day for doing some work and turning up. Yeah. Now, at this point, once I get above there and I'm well on my way with little likelihood of it coming back at me, that's when I might start to think putting it to break even. And at that point, I can just, go and kick a football in the garden or make a milkshake, whatever it might be, right? Answer your questions in the members group, which is generally what I do. Um, and then you're, risk free and you've made some money. Worst case scenario is you've made a profit on the day and happy days, and you come back to bat at the next innings. So another way to play that would be, well, you might want to see the market come up, pull back. Oh dear, now you're under heat. Coming towards your entry point, fiddle around here, play with your nerves, play mind games, and then proceed to go back up. Break that area where it came back from. Now that is a broken resistance. Then you can move your stop up and you're full in, right? Instead of, you might want to go in, say, 0.5% and say, right, I am prepared to lose 0.5%. I'm not even going to bother taking any money off the table. And if it comes back at me and I lose 0.5%, fine. All right, I'm out. Never mind. I might have another go at it if it sets up again. Or I hope it comes in, and your stop should be somewhere where the market is unlikely to come and get you, right? So it might be below price and balance, where you've already had some, support in the past, right? So in this case here, just below, turn my mic thing off, just below this level here, where if it comes down, it should find support. It should respect the trend line, that sort of thing. That's where your stop should be. It should be in an area where if where it's triggered, then your trade plan and your thesis is wrong, and it should hopefully go the other way, and you'll be grateful that you stopped out at a small loss. So basically, move your stop at a point where the market's shown you this is going in your direction, and it's breaking structural points on the way up. I mean, you might even want to add to the trade. You might be so convinced, well, you know what? I think this could be, this might be going higher. Probably is. Who knows? Let's play it out. Don't know. But remember, I'm not bothered now because I've made my money on the day. I've got my target, and I'm certainly not wanting to hold on to this overnight. I'm not a swing trader. I don't want to get up at the middle of the night and check my position. There you go. You wouldn't have stopped out. So you would have been happy that you've made your money on the day, and you come back and back on another day. All right. So that is the power of day 3. In summary, you've got order flow that has been building up over the course of days, of course of a cycle. So you've got 3 days of cycle. You've got Monday, Tuesday, Wednesday, Monday, Tuesday, setting you up for a Wednesday trade, Wednesday, Thursday, setting you up for an all-in Friday trade. And when I say all-in, Fridays are the days, Wednesdays and Fridays are the days where you tend to see the biggest movement. And that means bigger money. Okay? Tuesdays Thursdays are the days where you tend to get chopped up. You can have a nice 3-day cycle happening on a Thursday, which played out for us today, didn't it? Just get rid of playback mode. Computer being super slow. Reload. So I believe it was a 3-day cycle today, wasn't it? Even though it was on a Thursday. So it was day 2, but 3-day cycle. So Yeah, it was. Uh, so Monday low of the week, one, day two, day three, day one, day two. Sorry, bear with me. What am I talking about? Yeah, so high of the week, failed. Day one, day two, day three, blew off. All right, so we're going to leave it there. Um, Not sure how long that webinar was, but that is essentially an introduction to how to prepare for the 3 day cycle. So um, today is Thursday. Let me run it off. So for Friday, look, these are the instruments that I look at, and I've got them sectioned off as a no signal day. I like to start with the dollar and the yields. They tend to dictate what's going to go on across the board of instruments. And as soon as I come in on the day, I'll have them all as non-signal days. And then throughout the watch list, which I create for everyone at the start of the day, so I tend to not take questions as soon as I get in until I've figured out for you all what is looking good for the day. I'll go through this list, and given that Friday is day three, well, they're all categorized as day three opportunities, but are they in the 3 day cycle? Right? Doesn't have to be Monday, Wednesday, Thursday, Friday. It could be a failure at the high of the week. So this was a failure at the high of the week. Day one, day two, day three, day one, day two. So this was a day two. And tomorrow will be not only day three Friday, but it'll be day three of the 3 day cycle. Right? No idea which way it's going to go. But look at where the money is. Where's the money? It's down here. Everyone down here is still in the money, right? So we've got day one, day two, day three, day one, day two, day three of the 3 day cycle, and it's day three in the week, Wednesday, Thursday, Friday. So we've got a 33. Whoops. We've got a 33. A day three on a Friday and a day three as part of the 3 day cycle, right? So that could be a powerful move with lots of order flow. And my best bet is that we're going to come lower. Why? Because we've got the money down below. There are stops below here, below the week, below the low of the week for this market to go to. Not only that, which we'll come to at another stage of events for premium members, is we'll talk about signal days. But as you can see, we had an up day on Wednesday. We've got a down day on Thursday. If this ends low, then this could be a pump up scenario for a gigantic sell off to target Wednesday's lows. Because that would be a green day close, sorry, a red day close. So it's closing red. So it will be like what we saw in the NASDAQ today. Exactly the same scenario. First red day was on Wednesday. It was a day three in the 3 day cycle. All I wanted to do was sell. That's what I was looking for. That's what I got. All right. So we're preparing for day threes, Fridays, or a day three Wednesday, or a day three of a 3 day cycle of a 3 day cycle in terms of high and low of the week. Right. And that is helping us build our thesis to make money in this very difficult game. All right. So we're trying to make what we can easy out of what is actually a very complex matrix of fugazi. Fugazi means it's all fake. All these little moves, these bars, you get this big fat bar. All right, well, look, you got this big bar here going up. It's broken the high of last week. Well, that means it's going up. No, it's all fake. Make it simple. Break it down into a formula that you can follow that repeats itself. And an easiest thing to do is count the days. Monday, Tuesday, Wednesday. Monday, Tuesday is the opening range. Wednesday, what has Monday and Tuesday done? Am I high up at the week? Am I low down in the week? All right, am I going to do a short squeeze because it's Wednesday? Am I looking for that short squeeze? Am I looking for the long squeeze because it's Friday, like we just saw in Japanese yen? Right? So, any questions before I move on? That is essentially preparing for day 3, the 3-day count, wrapping up. The market moves in cycles of order flow. That's what we've talked about. Day 1 and 2 is the order flow, and we can prepare for a directional bias. If this, then that. So on day 3, if it's up high and it's been building up and up and up like it has on this NASDAQ, so if that, then that on day 3, right? Okay, I hope that helps. It doesn't seem like, I hope you're not all asleep. All right, right. Has everyone enjoyed that? Has everyone taken out of it something out of it? Have we moved a step in the right direction? Does anyone want me to clarify anything before we move on? If you enjoyed it, if you think you got some value out of it, what am I doing here? I'm just messing up my computer. Then please give us some recognition in Trustpilot. It really helps. Listen, the better we do as a department here in the premium section, the more the company are going to get behind us to really push this forward, and we're going to get much more for you coming along to help you in your trading journey. Okay, so let's try and get us up to 5 stars, and that would be a real achievement. All right, so again, this is a Black Friday promotion. Get up to 75% off, claim your offer. For some reason, I don't seem to have the link for that. It might be somewhere on the website. I don't know. Look, I'm going to put my email address in here. There's my email address. If you want that link to the promotion, send it there, because by then I would have had the kind guys in the team to have sent me that, and I'll be able to get it across to you. Alrighty. Thank you, Shiv, for the review. Alrighty. Now, tomorrow is Friday, so I will be doing a market watch list, looking out, basically doing what we've done there, day 1, day 2, day 3, Wednesday, Thursday, Friday. What's happened on Wednesday and Thursday? Where are we in relation to the flow? If we're up high on the week and we've come from down low, maybe Monday started off low, maybe it started off in the middle, Tuesday came low, we've pumped up, well, maybe we're looking for the short. Depending on the behavior of price, but if we start trapping traders up high that are breaking out, then I want to see us move away from there and get in on a parabolic short, or vice versa. All right. Right, so I think we're going to wrap it up there, guys. So thank you very much for joining us. It's been a pleasure. Do take advantage of what you're seeing there on the screen, the FX Street Premium, up to 75% off. Claim your offer for Black Friday, and have a fantastic evening, day, wherever you are in the world. And I'll see you again. We'll do another one of these with me on the 16th. And between now and then, you've got Yohei that will give you 5 things to know when trading gold. Everyone loves a bit of gold. And then on the 15th, you've got Ian talking about correlations, and he'll give you an in-depth look at correlated products for you. All right. So thank you all for being here, and we'll see you again.